You're watching Truth versus Hype. For the Indian media, the public and policymakers, Vijay Mallya has become the face of bank fraud. But in the balance sheets of India's biggest government banks are many more Mallyas, many of whom owe similar amounts of money and are also accused of fraud, except you'd have never heard of them. This week, we investigate the big invisible defaulters of the Indian banking system and how their stories expose the rot within. The focus may be on Vijay Mallya and his 7,000 crore loan, but it conceals the sharp jump in other bank fraud cases being probed by the CBI. 171 cases in all, close to 27,000 crores, up 20% from last year. This jump is symptomatic of the darker underbelly of bad debt afflicting Indian banks. Bank fraud is the final stage of when a loan goes bad, no longer about a borrower who is simply unable to pay, but when there is a suspicion that the money has been siphoned off, quite often with the collusion of the bank. No better example of the new face of bank fraud than Zoom developers, the only trace of which is their closed office here in Indore. The large number of bank notices reflecting the high debt racked up by this little-known company. An extraordinary rise for a company whose history cannot even be found in government records. It stopped filing in 2007. No website to speak of, no trace of projects executed. As the loans mounted, the investigating agencies stepped in. This is the Enforcement Directorate's 27-page order, which sums up its investigations into the complex manner in which Zoom took loans, ostensibly for projects in European countries, but then siphoned off the money. They've tried to summarize their findings in a flow chart, just to give you an idea of how complicated the entire money flow is. Zoom got bank guarantees from Indian banks against contracts from foreign companies to execute projects abroad. But the ED claims those companies were controlled by Zoom itself. One of those companies was controlled by the promoter, Vijay Chaudhary, to a Liechtenstein-based trust. No projects were executed. The money, the ED says, was simply moved out. Some of it found its way to properties around the world, like 1280 acres of land worth rupees 1,000 crores in California, attached by the ED.
CBI says they had arrested founder-director of Zoom, Vijay Chaudhary, in the year 2012, and he had been bailed out the same year. But they know where he is in the country. Quite strangely though, Enforcement Directorate, which had registered an FIR in this case in 2013, a year later, have not been able to arrest him yet, and according to them, he is an absconder. But when NDTV visited Vijay Chaudhary's address in Mumbai, here's what we found.
The promoter of Zoom, Vijay Chaudhary, according to the CBI, has been arrested and is now out on bail, but hard to trace. Except for this picture from 2008, which shows him meeting a Chinese businessman, there is little trace of Vijay Chaudhary. The only member of the original team, Sharad Kabra, then Vice President of Zoom Developers, under arrest. His bail denied by the High Court. We spoke to his lawyer in Indore.
Embezzling of funds के बारे में हमारा ऐसा कहना है कि ये जो बीच में जो मेल्टडाउन आया है, जो ग्लोबली मेल्टडाउन जो आया था, उसके कारण हमारे कुछ फंड्स कुछ ब्लॉक्स हो गए हैं. ऑल्दो हम लोगों ने हमारा जो बैंक्स का जो कंसोर्शियम है, उन्होंने हमको वो रेडी नहीं थे वो करने के लिए कंप्लेंट हमारे ऊपर, बट स्टिल वो कहीं से प्रेशराइज होके और उन्होंने कंसोर्शियम बना के और उन्होंने कंप्लेंट करी हम पे.
सर, तो आप कह रहे हैं कि जो सारा पैसा गायब हो गया, ये इकोनॉमिक मेल्टडाउन की वजह से हुआ?
वो इकोनॉमिक मेल्टडाउन के कारण.
बट सर, आरोप ये है कि ये जो सारी कंपनीज थी, ये प्रमोटर की फ्रंट कंपनीज थी.
नहीं, उन्हीं की कंपनीज नहीं थी. ये दूसरी कंपनी थी, फॉरेन कंपनीज थी. जो सब प्रोजेक्ट्स थे वो फॉरेन कंपनीज के साथ थे हमारे जूम के.
बट ईडी ने ये साबित किया है कि इन पैसों से अमेरिका में करोड़ों का लैंड खरीदा गया है.
इसके बारे में मैं अभी कुछ नहीं कहूंगा आपसे.
But there's also the question of how banks lent to him. Punjab National Bank is the biggest lender to Zoom. They refuse to respond to queries. But a former chairman of PNB said that he knew about the Zoom account and made an extraordinary admission that Zoom took bank officials to their overseas facilities but never showed them the actual work sites.
I know the Zoom developer. Look, I have also financed that proposal. Now the people who have gone to see their factory sites abroad, they have gone in the company's cost abroad from India and they have never visited that space. Now, that may be 5-10% cases. Let us also very frankly say this 1 trillion stress asset is not because of one Zoom or one thing. There are certain malfeasance, wrong thing has happened. Absolutely no doubt in that.
So, Mr. Chakravarti, you mean to say that he actually preempted bank officials from visiting the sites?
Yes. And you go abroad for the inspection at the client cost in the client's plane. And he has never allowed you to visit that place. They come back and say everything is fine.
But Mr. Chakravarti, the question still remains, how did banks like Punjab National Bank, one of our biggest public sector banks, allow something like this to happen?
You see, look, banks have gone wrong. Basically, the factor is that they have gone wrong in the credit appraisal. Because we have never questioned, and let me be very frankly say, I was also in the banking system. We have never bothered to find out what is the source and quality of the equity. Now, today the problem is that many of these borrowers, they don't have their money in the project. These are all borrowed money. That's the first thing. Second thing is that in the credit appraisal, you must check that how much risk do you take. So banks don't have any risk management system at all. And I must say, it is very primitive. It is not an information-based lending. Majority of times it is intuition-based lending.
Zoom has gone into liquidation, but for the banks, they will have to recover crores of cash from this office space in Indore and from this one in Mumbai, which seems difficult.
We're just now at A53 MIDC Industrial Area, Marol Andheri East, and this is the address which is given for Zoom Developers Private Limited. Now there seems to be absolutely no commercial activity which is taking place here. In fact, this entire building seems to be completely run down. What people here are saying is that in 2011, Zoom Developers shut down.
In an extraordinary twist, the CBI claimed that vital documents pertaining to Zoom went missing from its office. They registered an FIR and conducted an internal probe, but failed to find who was behind it. Here in Ahmedabad is the office of Winsome Diamonds and Jewellery Limited, now abandoned. It is from here that it claims to have run a global business exporting jewellery around the world. Except Winsome's debt, along with its subsidiary Forever Precious, is close to 6,000 crores, the second highest defaulter after Vijay Mallya. The roots of the crisis trace back to 2013. When Winsome's customers in UAE, represented by a Jordanian called Abu Obida, defaulted by about 4,700 crores. In turn, Winsome claimed it failed to pay bullion banks from whom it had bought gold. Those bullion banks invoked letters of credits of rupees 3580 crores from Indian PSU banks. Winsome claims that the crisis was triggered by genuine reasons, that their UAE suppliers were hit by falling commodity prices, and that they made repeated attempts to get their money back from them, even getting orders from a court in Sharjah against these suppliers. But audits conducted by the banks found that 80% of the gold exports by Winsome went to 6 companies with a common ownership in UAE. These companies, which were controlled by Obida, did not have any known storage facilities, and according to the audit findings, this hints at a possible diversion of funds by Winsome. We made repeated attempts to contact Winsome, but to no avail. But in their annual reports, they claimed that the bank audits found no significant wrongdoing. But the CBI is not convinced. They registered an FIR against Winsome in 2014 on the suspicion that the Winsome and the UAE supplier might have been acting in collusion.
Any investigation abroad is immensely difficult. Particularly when it involves finances. You know, the whole, I'm not saying that we alone, our banks alone are suspect, we alone are dishonest. Dishonesty is writ large over financial institutions all over the world. So once money is involved, it's difficult to trace. I know, many of our worthies were invested heavily abroad in all kinds of islands, Cayman Islands, name various islands you can't spot on the world atlas.
Winsome itself admits there are questions over its reputation, which forced it to lose its European and US markets in its annual report, saying that due to negative reports in the Diamond Intelligence Brief, its exports to USA and Europe almost dried up, forcing it to enter the UAE. We accessed one of those reports, which says that the web around Winsome is gradually getting untangled. It seems that the fall in gold prices, massive gold speculation, and perhaps round-tripping has led to massive defaults. There are serious questions for banks for giving Winsome such generous lines of credit with very little collateral in return. The collateral appears insufficient. The mortgage on its units across India and corporate and personal guarantees from the promoters. The personal guarantee now rendered meaningless by the absence of the promoter, who is said to be in Dubai.
There is no collateral because they have nothing on their own. The basic problem, I said you, there is no skin of the borrower. In India, I have seen people who have done a business of 100 crores to even 50 crore. They don't have very little of their capital and little bit. Only very smaller borrowers have the security. Bigger people, when they lend them, absolutely there is no security. You cannot lend the Tatas based on the securities. Absolutely it is not possible. It has to be balance sheet based lending, project based lending. So many of this lending is based on the jewelry. And you see, look, if you see in our case the jewelry export, basically if you follow them, it is the relative business between the relative. One set of family members works in India, another set of family members outside India. And it is more or less, you see, many places it has happened, but I will be not able to definitely say what has gone wrong in the Winsome.
Now, in the cases that we've seen so far, there's been a suspicion of the culpability of banks, but as yet no action. One exception has been the case of Bhushan Steel, described by itself as the third largest secondary steel producer in India, and that of Syndicate Bank. The company's claims appear not just to be hyperbole, showing a steady revenue peaking in 2015 at 11,000 crores. But its loans were also keeping pace, almost too fast, from 2012 borrowing close to 7,000 crore rupees a year. Bhushan claims this was because a new steel plant in Orissa was commissioned in that period. In 2015, however, it suddenly posted a 1,250 crore loss. Bhushan says because the initial year of operations had low capacity utilization. Further, the import of cheap steel started soaring, coupled with falling prices. But its own balance sheets show that a big dent was from interest payments, raising questions as to whether Bhushan was declaring genuine numbers. By that year, Bhushan had run up close to almost rupees 40,000 crores in debt, and it's perhaps to manage the increasing pressure from banks that, according to the CBI, Bhushan faltered. In 2014, the CBI laid a trap in Bhopal, arresting a relative of Syndicate Bank's CMD, accepting a 50 lakh bribe from a man claiming to represent Bhushan Steel. The purpose, the CBI claims, was to get the bank to extend the credit limit to the ailing company. That in turn led to the arrest of the CMD of the bank, Sudhir Kumar Jain, and Bhushan Steel's vice chairman and MD, Neeraj Singhal. In a statement, Bhushan Steel said, "These are only allegations against Singhal. The matter is pending in court." Syndicate Bank refused to comment. Despite the action, it remains unclear if it has led to any greater diligence. On the company's website, Neeraj Singhal, now out on bail, is shown as continuing in his role despite the charges. But the banks, it appears, have little choice but to try and seek a restructuring of Bhushan's loans, even as the company plans for expansion.
First, you see, we have to define what is corruption. Now, I am not able to understand. Look, many things we have not defined.
Well, so the specific allegation is that a bribe was paid to the CMD to help them out with this bad loan.
But Syndicate Bank chairman does not sanction the loan. It is the board committee sanctions the loan. The problem is that, and that same Bhushan Steel had got a loan from another 50 banks. Now, if Syndicate Bank is giving a loan, is a wrong thing. Now, what I say, whether it is a bribe, corruption, or it is a bakshish, that is a different issue altogether. Look, the problem is that we have to differentiate between the things. The system has become such that, you see, look, the system we have created in such a way that many of things have crept into that.
That is the famous expression in banking, greening. A person gets a loan of about 10 crores, puts in a project which doesn't pay, then he wants more money to see that the project gets revived, gets new life. You keep on giving money to that particular person. It's not as greening, but greening is only up to a point. At a point in time, it should become clear that greening is a false premise, and that the person cannot, you can't recover money from this person who keeps on losing money. So at that point of time, yes, if you still give a loan to a person who hasn't shown any promise, who hasn't recovered from the debt, then I think it's recklessness. So then the CBI gets the jurisdiction.
Coming up on Truth versus Hype, a new dimension to bank fraud. It's called the duplicate effect.